All right, we want to get right over to Rick Santelli. He is going to have those numbers in just about 5 seconds' time. Rick.
Yes, we are awaiting our May read on the Consumer Price Index. And, of course, this is expected to be a big deal for the Fed, which meets today, by the way, and it is hitting the wires. Unchanged on headline month-over-month CPI, unchanged. As was pointed out, we're expecting up 0.1%. Unchanged is the lowest level going all the way back to May of 2020, so we'll call it 4 years when it was minus 0.1. We've had several reads that have been zero. Now, if we look at ex-food and energy month over month, up 0.2, also, as Becky pointed out, 0.1 lighter than expectations, 0.1 lighter than the rear view mirror, up 0.2. Last time we were at 0.2, well, it was October of last year. To find a lower number, up 0.1, you're going to August of 2021. Now, the year-over-year numbers, 3.3 on year-over-year headline, 0.1 lighter than both expectations and the rear view mirror. 3.3 is the lightest going back to February when it was 3.2. We started the year at 3.1. And finally, ex-food and energy, or core, year-over-year, expected 3.5. Last look, 3.6, comes in at 3.4. 3.4 is the lightest level going back to, and this is a long way. We're going all the way back basically 3 years to April of 21 when it was 3.0. Even last month's 3.6 comp to April of 2021 because there's a real void there by the way it shot up so aggressively post-COVID. Now, Becky didn't give you expectations for the indices. I consider them maybe the most important. On headline, non-seasonally adjusted, the actual index, it moved up to 314.069, a new all-time high. If we look at the core index, which is seasonally adjusted, that moved to 318.14. Guess what? A new all-time high. Those indices have never been higher, and they underscore the angst that the population has, because no matter how small the month-over changes get, the cumulative effect is substantial, and that's what these indices continue to show us on a month-over-month basis. Yields, as expected, have dropped rather dramatically, and now we're getting right back into where the area of trade was before the non-farm numbers were released last Friday. We're hovering right around 427, 428. That was the low yield before we skyrocketed on the jobs report. The short end of the market dropping as well. We're now at 468, as Becky pointed out. We're at 483-ish before the number. Substantial drops. Pre-opening equities have moved all the way up 260 points in the Dow futures. Becky, back to you.
Rick, I think you summarized it so well. And your point is this basically erases the jobs number that showed maybe something that wasn't going to bring us rate cuts. This erases that number and kind of evens the table again, the playing field?
Yes, I would think that's exactly right.